Good thing you had that half boy. I did.
Oh, I've always done something.
Yeah.
Fit kitchen they're not bad.
What are they?
Fit kitchen, they're like,
Microphones, guys.
uh,
On. Microphones. Oh, you're right there. We're not gonna be able to see you guys.
You may not want to.
Yeah. Why don't we, oh, I suppose I should. Hello. It's 2:03 p.m. Today is May 16th, 2017. Are we ready, John? I saw a hand. I guess I was, okay. May 16th, 2017. This is a work session of the Marquette Township Board, and we are going to talk about water debt retirement and rate structure. That works better.
this way you got a clear shot.
Do a roll call there.
Clear shot.
Trustee Everson,
Present?
Trustee Marks,
Present.
Trustee LaRue,
Here.
Trustee Wiegand,
Here.
Treasurer Johnson,
Here.
Clerk Retires here, and Supervisor Durant.
Yes.
Staff present is Manager Gerard and Superintendent of Public Works Kirk Page.
Thank you. Do we have any public who would like to speak? It looks like not. This was a posted meeting, so any board member comment to start off anything? Nope, that's good. Let's get into it then. I think the best thing, I've been wrestling with this for a couple days. I used my Public Works folder. I don't know if you guys did, but I can't make head nor tails out of this. I don't know how this happened. I don't know how we got into the new year in the negative. This looks like sort of a kind of a cash flow type printout, not quite, but I can't make these numbers add up, so I think we'll start, unless somebody has something really poignant. I would rather hear what Kirk has to say for explanation.
I had sent out a request for some additional information. I didn't hear back from anybody. Anybody get it?
I did not get that.
Sent it to Randy
Yep, I got it.
and you.
Let's see if Kirk can answer some of this. I don't know where you want to start.
Well, I'll just start with, basically, this is, actually, we've been talking about this for quite some time, or at least I have. Not sure if anybody else has been listening or not, but as you recall, the budget work session that we had for Public Works last year, I just received the rate methodology study for the water project, which basically looks at your budget. How are you going to pay for the debt? How are you going to pay it back? It also looks at the budget, the entire budget. So basically, the debt service was proposed to cover the debt that we were going to incur. So we already had existing debt service, and we had proposed debt service. So what you adopted in February was the fee schedule based on the budget, which included all the current debt plus the proposed debt. So this,
I think it did include the 75 cents that we were going to put in October,
Correct,
too.
yes.
Okay.
so this thing is basically two parts, so I'll talk about that first. So a few weeks ago, the project got stopped. So therefore, you know, we've already been charging for debt service for a project, and that's restricted money. So what I'm proposing is remove that debt service.
Is that the $1,600 that we've
Correct, yeah.
accumulated?
It's 75 cents a month.
Okay.
First of all, pay that money back into the cash fund of the water department because it's restricted. And this was first brought to my attention by Lois, who's the one who gave me these numbers. She said, you know, this is restricted money. You can't use it for anything other than debt. So since we didn't incur that debt, I'm proposing to pay that money back. And that only amounts to whatever I said here, $1,600 or whatever, or
1704?
1704.
Okay.
And replace it with a volume rate. So that worked out to be roughly 22 cents per 1,000 gallons. Okay? So therefore, that's 22 cents per 1,000 gallons that we can use.
Okay, so
Yep.
replacing it, okay, I get that now,
That's part one.
okay.
If I got where we're at up till now, we got a $153,000 bill for engineering for this project, or around there.
Yeah. Well, it's all cost, but mostly engineering, yeah.
That would have normally been paid for through the
That would have been reimbursed.
DWRF
Correct.
loan.
Yep.
And because that's not going through, we need to find a way to pay for the 153,000 and change.
Well, we've got, if I could move into part two here.
Okay.
That's part of it. Another part of it is, Randy had requested from Lois, basically our capital outlay, and she's got both funds here, the water fund and the wastewater fund. So, again, as we've been discussing for a long time, we weren't really doing anything that had not been planned to do, and we've been funding, but long-term funding. So, a couple of projects got accelerated. So basically, that comes out of, your cash. So that's something we've been doing for a while. Instead of borrowing money, we're paying as we go, basically. So, but there's still a difference between the wastewater fund and the water fund in terms of expenses and the types of expenses. So we've been also doing a lot of sewer extensions as well, but the difference being they're a lot smaller, and less costly. And also, if you look at the sewer debt, or sewer charges, the wastewater rates, they're basically double what the water rate is. So, we're in pretty good shape.
So is the 153,000 in any of these numbers this year? Or is this something new that would,
No.
down in here?
Well, it's in there. I mean, it's in there. I mean, this is not itemized. This is just like basically totals. So we got two things. One is like retained earnings, okay? And she's got water and wastewater. And then she's got the cash. And both of those, you got restricted funds, which is basically your debt service.
So I'm thinking if it's just the 153,000 we need to come up with.
Well, no.
Is that the case? Is that gonna wipe
No, we need to
this-
come up with a lot of money, but again, if I can go back, okay, to part two, what I'm suggesting here is back to the work session, back to the rate methodology study. His spreadsheets were showing basically anywhere from $140,000 to $180,000 loss per year. Okay, so for like 10 years, and that's assuming everything remained the same, which is the debt service remained the same, our replacement and improvement expenses stay the same. So every year I do replace or budget for replacement and replacement for improvements. So assuming all that remain the same, then that's where that loss is going to show up. So you may also recall that I went back and asked a specific question: what's it going to take to prevent this from occurring? And the number he came up with was $1.82 per 1,000 gallons. He said, well, if you want everything to continue the same as they are, you're gonna need an extra on top of what we were already charging, $1.82 per 1,000 gallons in the water. So, and I'm doing my own budget, you know, trying to make his interface with mine. And my numbers they weren't exactly the same, but they were ballpark. They were pretty close. Okay, so another thing that's happened is last budget year, it was later in the year, but the sale of the Township Hall, the water portion, went back into the water fund. Okay, and I forget the exact number, 152,000, 154,000, something like that. Okay, that basically bailed us out because the timing of that occurred right when the cash was a negative number. So, but we got that, so that we were fine. So this year, to make the budget balance, and there's also, you know, I'm getting obviously some conflicting feedback from you folks and others about we need to raise the rates, we don't want to raise the rates. We need to raise the rates, don't want to raise the rates. So in order to balance a budget, I did basically the same thing. I put a number, and I forget the exact number, $150-some-thousand, that I was taking out of the fund equity. Okay, well that can't happen because I don't have the fund equity to use that money. So that's where the balance of that, in order to get that back, okay, that's going to cost $1.67 per 1,000 gallons. So again, it's roughly tracking what the consultant said, only like with our real numbers.
So what did we approve when we approved the budget? I was under the impression that the increases and decreases you had were to cover the budget, that's why I was so surprised to see this. It's like, where did this come from? We just approved a budget
Right.
to account for all this. That's why I thought maybe the
You approved the
150,000
budget that was actually developed. So what the original budget you approved was like basically the first submittal. So I hadn't done any calculations. The one that recently got changed was adopted was incorporating all of these numbers that I just gave you. But what I'm saying now is, since we're not doing the project, okay, first I just started looking at the, you know, that service number, which is a pretty tiny number. I'm thinking, okay, well, if we, you know, remove the 75 cents and replace it with the 22 cents per thousand, okay, but that ended up being a pretty tiny number. Okay, so obviously we're still going to have, and I've confirmed this with the consultant, it's going to keep happening unless we raise these rates back up. So in other words, we're going to end up every year with another $150, $160, $170, $180,000 reduction in the net investment. Okay, that's basically your retained earnings.
But I thought that had to do with the project,
What had to do with the project?
that
No.
you were rolling all of the debt into one,
Yeah, right. It's
Number.
not, right. It's not just debt. The only debt-related numbers is 75 cents and the 22 cents. The rest of it's like a standard operations. So
Yeah.
that's, okay, when you
did
look at
adjust
this,
the rates.
when you look at that pile of spreadsheets that gave, which outlines all the capital outlay we've made in both funds, okay, that's a significant number. So in other words, we used to maintain a pretty decent cash flow. You know, we might have $600,000-$700,000. Okay, but when you drop down to like a negative $20,000, okay, that's what I'm talking about. And the 150 or 134 that for the engineers. I mean, that's part of it, but that's just another piece of the big pot of money that's been spent.
I'm curious, am I the only one thinking this? Did I misunderstand when we pressed the budget? Randy?
I think where the confusion comes in is we got two different things we're dealing with. One, that you talked about before was rolling all of our current bonded indebtedness together,
Yes.
5 of them, and then you established a plan to address that, and that's what you're referring to. When I went to Lois because I've been watching the fund balance, the available funds, dollars, and as you'll remember, when we first started talking about this, back, over a year ago, when we were talking about rolling the DWRF in with the roads project, I cautioned you that we're gonna have to deplete our cash, because it's gonna be some time before we get the DWRF funds, if we get the DWRF funds. Well, ultimately we didn't, because you backed away from the project. But in the meantime, you spent on water projects something over $500,000 out of the cash that was on hand. So that's what I was looking at. When I looked at this as of the end of March, in the water fund, you got unrestricted is down to like $69,000. Restricted is at 191. So I went to Lois and said, I need you to tell me what has been spent out of the cash funds. I don't care about what's been bonded or anything else, but what's been taken out of the cash funds in conjunction with the road project that was unplanned, that we paid for out of Kirk's cash, out of his replacement improvement and, and out of his contingency funds. And I wanted to equate that to a per 1,000 gallon rate increase that would be necessary, because in less than 5 months, we're going back into the wintertime again. And if we get a cold winter and we start getting freeze-ups, we don't have money. We don't have money to deal with that. So I wanted to make a proposal to the board to increase that, to build up that fund balance before we get into freezing weather, so we've got some cushion to recover basically projects that were, like Kirk said, that were accelerated. They were planned projects ultimately, but we accelerated them dramatically without funding to do that, so we depleted our cash reserves.
So that's what I understood was the 400,000.
You got the, no, that's the bonded indebtedness. That was for past projects that were bonded that were never properly budgeted for going forward. That's what they were saying. That's where the 150,000 shortfall every year comes from, is because you're accruing interest on the bonds and you're not generating revenue to offset that. That was not built into the budget for whatever reason. I don't know. It never was built into the budget that way. And we discovered it when we had the consultants go and look into trying at the budget process, the discussion we had. How do we separate these out? Well, when they got looking at it, they said, you got a bigger problem besides separating them out. You're not properly funding them. So we got two things that we're dealing with. One is that it's the long-term debt that we're lagging behind. It's like paying only the interest on your mortgage. Your principal stays the same, and you're almost keeping up with the roll of the interest, paying interest on top of interest, which is different than what I was concerned about. What I was concerned about is getting cash back into those cash funds, the replacement improvement and the contingency accounts that have been depleted because of the accelerated work.
So the compilation of the debt, I'm trying to remember what number was supposed to have solved that.
That's the number you were talking about. That was taking into consideration the bonded and the installment purchase, because it included the property that we bought for the Wellfield property. We rolled all of those things into a single figure, basically, and said, if you want to catch up with this figure, here's what you have to do.
Yeah, and we went from
Yeah, and we did
$15
that.
to
That's,
$20 or
that's
something.
over,
Correct.
that's over and done with.
So that's
That
correct.
number
So that
was,
part you did. Now,
I
what
forget the
I'm,
exact number, almost just under $400,000.
right, and that's the 400,000. Now, what I'm talking about is what came out of cash, which was not even looked at
And that's
as
what I
part
thought
of
that was.
No, that wasn't even looked at as part of that. We've just been drawing out the cash, and hoping or counting on the DWRF funding to come in at low interest to be able to replace that cash, and then we didn't go there. But we did expend a little over $500,000 in project and engineering and everything else, South Vandenboom and Trowbridge, along with the road project, up until your most recent decision.
How are we gonna explain this? How are we gonna tell the people that
Well,
the
but
raises
remember,
they
we-
just
But we told the people when we were talking about the road project, you know, I think Dave will remember this, we told them that we would be incurring incidental costs with infrastructure as we were doing some of these road projects, but it got a lot bigger. When you added Vandenboom, which was not gonna be an incidental, that was a new extension, South Vandenboom. You have water and sewer, both, but the sewer fund is in good shape. The sewer fund, as of the end of March, has 861,000 in unencumbered and another 167,000 in restricted. So the wastewater side is doing good. It's the water side that got hit by these accelerated projects.
So we should be able to decrease the wastewater side then, at least to make up for some of this.
Possibly.
Do you want?
Well, we already did. I reduced that this year.
Yeah.
What's our annual water volume that we sell, total volume, ballpark?
90 million.
90 million, right? So you got 90 million gallons, divide that by 1,000, and divide that then into $522,000, and that'll tell you how much you would have to increase the water rates to recover that. I don't have my calculator with me, but it's not a large number. And that, you know, and we warned the residents. We said there may be an impact on your water as a result of this, in conjunction with the road project, because we don't want to dig the roads up again afterwards.
That was explained to them.
Absolutely.
In all 18 of the meetings that we
Right.
attended, that was brought up.
Right.
We are gonna take care of things so we don't have to dig the
But it
road.
came out of cash instead of out of a DWRF fund.
Yeah, and I had the impression that when we balanced the budget and approved it, that this was taken care of. Am I the only one that thought that?
That was my understanding too. And that-
Well, the budget is based on projections, it's based on,
Yeah.
okay, things that are happening, planning.
So are we
What I'm
not
trying to
selling
do
as
is say,
much
okay,
water?
things have changed. They haven't totally changed, but, since we're not doing the project, then we have time to focus on some of this other stuff, which we've been talking about all along anyway. It's not something that's brand new. And the budget, I'm not sure what is it you're worried about having to explain?
Increases. After we've already done the budget, we've already made our increases. We've already changed our fee structure. I thought that this was all in there.
Well, no, not everything is in there.
So that's what we're gonna have to explain. Yep, okay, your rates just went up,
I
and they
mean-
have to go again because we didn't
Right.
have all the
Yep.
information.
Yep.
And now, what's gonna happen when we do the next budget? We're gonna be starting that in a few months.
The roads will be done, so we won't have that particular problem.
No, but I mean, what's gonna happen to the rates? They're gonna have to go up again? You're not gonna recover that money that quickly.
No, and I'm not suggesting that, okay? I mean, if Randy wants to recover $500,000, you're right, it's gonna take more than $1.67.
$1.67 for 90 million gallons gets you about $150,000.
So,
How much did you come up with? 150?
About 150,000.
Yeah, I used 91.6, I believe. Yeah, and I got the number right in here, because this is a number that I put in on the revenue side. Okay, I mean, that's what the budget is. You're making a projection. So if things don't happen, you gotta adjust the budget. And it's not just expenses, okay? I put in this 153,000 as a revenue. But that's not gonna happen.
Revenue from the
Right.
DWRF, which isn't gonna happen.
Correct.
How can that be revenue?
Well, it's
Well, it can if you don't, it's using your fund balance to balance the budget.
I guess my original question was that $153,000 is essentially a shortfall brought on by the engineering work that was done for the road project that didn't move forward, or for the water
No,
project?
no, it's like overall, it's just an overall number. That's part of it, but it's not the whole number. Because the budget is made up of lots of different, It's lots of different things.
You know, I guess if I could rattle on for a minute.
Sure.
The, part of the things I don't understand about what we're doing here, and I think why the board gets so confused, and I know certainly why I get confused, is back in February, when we started down this whole road and justifying the water project in Trowbridge, I asked for a breakdown of, specific breakdown of the water bill, and what portions of that water bill were going for what. And we got the summary, and I mentioned that the summary supporting documents need to be some account numbers that go along with that, so when changes are coming along, and this is what I don't understand about this, but I'll get to that in a minute, is there's no account numbers that are applied to that summary. So the summary is one thing, and I don't see a change, an adjustment in that summary, but I don't see any way that you can refer from that summary back to specific count numbers and where the changes you're requesting are coming from, or where they're
going.
where they're being applied. And that's the part, and I sent this out. How about if I just read it?
Why don't you read it, Dan?
In February, the board was provided with a breakdown of the residential water bill, and I attached a copy for convenience. The breakdown shows 16 categories in total, with 11 that apply specifically to water. It's my understanding that this is a summary of where the monies received are dispersed within the budget. Part of our February discussion was that this summary is supported by other documents which are represented by the spreadsheets found within the body of the budget. Unfortunately, we have yet to be provided with specific budget departments, and more specifically, the budget accounts, which are the beneficiaries of the monies collected within each category of the attached summary. For example, the water fund, number 591, has approximately 25 departments with 100+ accounts distributed among them. The proposed changes affect some, but I assume not all, of the 25 departments and 100+ accounts. Which accounts are being adjusted and why? If we ask for a rate adjustment for 2017, an additional column should be added to the summary with the proposed changes. It would also be helpful to eliminate confusion if the latest revision date was included within the rate summary, so we don't get confused. Now all we have to do is document the proposed budget department and accounts affected by the suggested changes to enter into, to look at a budget comparison. I can't see exactly where your money is going, other than your explanation. There's no specific direction that I can look at and pick up and see a hard copy of what changed and where the new dollars are going, where the $1.45 per thousand is going.
My calculator.
Well, I see what you're saying. I mean, that's basically, I didn't get that request. I don't know.
That's why I sent that out, hoping we would have that for this meeting so I could get a better grasp on what we're talking about. Because I can understand in the theory that you're explaining as to where the monies are going, but I can't see specifically what accounts are coming up short and what accounts are not coming up short. And the problem I've got with specifically what you're doing is how can you do a water volume, how can you do a debt service decrease of 75 cents? And then you can make up for that by doing a water rate adjustment of 22 cents when the water rate money is not supposed to go to debt service.
Because it's restricted money, he's saying the only way we can get it is to put it back into rates.
But you're taking away from debt then.
But this is the extra debt that was put in
But
that
it's-
we're not gonna use,
We're charging for debt that we don't have. That's,
and that's the
I'm saying.
$1,700.
But when you say the 22 cents is to make up for the 75 cents you
Correct,
reduced out
yeah.
of the rates, that suggests that the 22 cents per thousand gallons is going back into debt service.
No,
no,
no.
no. It's going into operations.
Doing it as he's saying, since we're not doing the project, we need to get that 75 cents toward the debt out of there. Because it's restricted, we can't take the actual, that 75 cents, we can't use it. So, in order to recoup that money, he figured out what it would cost per 1,000 gallons. And the equivalent is 22 cents.
Okay.
Does that make
No,
sense?
if we don't need the 75 cents for debt service, then it should just plain be taken out of there, period. If we need $1.67 per thousand to pay for, to replenish cash funds, then the $1.67, if it's put into the per thousand gallons rate, should be justified on its own merits, not because we gave them back 75 cents, because we should give them back 75 cents if we didn't need it for the debt service. One has nothing to do with the other one.
Sure, that's right. So what actually we should be doing is adding the 22 cents to the $1.67. To get a real
To
number.
the $1.45.
No, to the $1.67. Because I deducted 22 cents from the dollar.
From the $1.67, that's how you arrived at $1.45.
Yeah.
So if you put it, if you just skip the whole 22-cent thing, then you're actually asking for a 75-cent reduction in the debt service, and you're also asking for a $1.67 increase in the water bill.
If you added 22
Right.
to 167, you go up to 189.
Yep.
Well, you're not asking for $1.89, right? Ultimately, you want to impact the water rate by $1.67 a thousand,
Yeah.
which is $1.45 plus your 22.
And what is that gonna give us? Where's that gonna put us? In the scheme of the DWRF and our current budget and the adjustment to the debt? Where does that put us? Does that break us even? Are we good then?
It'll break us even, plus, like I said, we'll still be able to contribute the same amount we've been doing for replacement improvement.
The 390
Yeah,
whatever
right.
thousand or something. The problem with that is, when we need to talk about that. We need to figure out how we're gonna restructure that, because I don't like that at all. That-
Yeah, and I
it's
know
just
you've
not-
talked about that, but where are you going with that? I mean, what are you gonna do, restrict X amount of money? That's what gets us into this situation, okay? If you start restricting, the ordinance specifies the priority of importance for all funds. Number one is operation and maintenance. Number two is debt. Okay, so you're already restricting number two. Replacement is 3, and improvements is 4.
Well, I
So if you
think
start
it-
restricting
It's gonna tie in.
your debt, your replacement and improvement, there's nothing left for operation and maintenance, which is the most important thing we gotta do
We
here.
have to tie in the CIP done
Oh,
differently.
I absolutely agree with that,
asset
yeah.
management.
Yep.
And plan our
Yep.
projects a little bit better.
That's exactly what we've been doing.
No, because we threw Vandenboom in, South Vandenboom, that was one of the things that,
We didn't just throw it in, that's been on the list for a while.
It's been on the
Yeah.
list, but it hasn't been funded. That's the
Right.
issue.
Right,
'cause
That's
that
the
money
issue.
was
You
coming
know,
and
we
going,
we
and that's-
accelerated projects without the money to back them up. And
Yeah.
that's the issue, and that's what got us in the hole
We
we're
either
in.
put that 400,000 away, like trustee Pompo always said, or 600 or a million or whatever it is, and do those projects in the way that they're gonna be done.
Right, and there's been, a lot of money spent on improvements, okay, which is not asset management, but we've got a master plan. I just don't make up stuff to do. And we're on our third version of the master plan right now. And that includes improvements. But we're growing. We're the fastest growing community in the UP. So basically, we're the only one. So that's where a lot of money's been going. So it's not that it hasn't been planned. And the only thing that asset management is going to do is maybe extend the life of what we've got already, okay? But even that's going to cost money to do that.
Well, the asset management plan's gonna put you on a schedule, basically, so you can expect budget year to budget
Yeah.
year, what it is that what you can count on, basically needing, anything beyond that. But,
And that's part of it.
But, what I'm very concerned about is our current cash level going into winter in 5 months. That's my concern. I'm not concerned about the bonded indebtedness or any of that other stuff that we're talking about. That's a long-term fix. We have an immediate need, and that is to have cash reserves ready and available in 5 months if we get a deep freeze. Because otherwise, we can't fix it. We can't operate it.
Randy?
See, what happened was when we're doing the projects in conjunction with the road project. We didn't have time if we could have bonded those differently, we wouldn't have had to spend the 400,000 or 300,000 on those projects that depleted our cash funds. But we didn't have time to do that because it was happening right now. So that's where we got into trouble, and the stopping of the road or the water project in Trowbridge didn't help because Kirk had to spend $130,000 on engineering, which didn't get replaced by the DWRF that he would have got it replaced if the project went forward. So that's why we're down where we're at right now. So if we would have bonded those projects like the ones before, we wouldn't have been in this situation right now. Our debt service might have been a little bit higher to pay for that, but the water rate wouldn't have been affected. So that's where we're at. We took the opportunity and spent the money immediately on the Vandenboom project, which was the biggest cash draw out of, and that's where we got our cash fund depleted.
But my frustration is that I thought that the adjustments we made to all of the rates covered that. And that's
Yes, they
my
would,
misunderstanding, I guess.
they would have, but when we stopped the water project,
If the project would have went through.
yeah, if the water project would have went forward, the
Because we're not
appropriate,
getting the DWRF money now.
yeah, the appropriate monies would have been there to cover that. Now, we're not going forward, so there's monies that would have been there to cover that shortfall that aren't there anymore. So that's why we're short again.
So what's our, excuse me, Dave, what number are we looking at? What total amount of money do we need? If somebody were gonna write you a check today, are we looking at 500,000? Not talking about raising rates or anything. What number are we off? It's because it keeps.
Well, it depends on what-
Unrestricted keeps changing.
For what purpose? I mean, if you want to recoup all the money that we spent today, then maybe $500,000 might help out.
Yeah, the
But-
rough figures that I have looked at for just the water side of the expenditures out of cash, along with the road project, is about $522,000.
That's the number I was looking for.
That's a ballpark number. It's around, it's just having Lois pull what she thought were the relevant ones, dealing only with South Van Boom, only with the Trowbridge project, with Ontario, those kinds of things. But a little over 522,000.
So then,
To recoup that in 1 year would add $5.80 per 1,000 gallons.
how does that affect your cash then?
Well, that would recover that 522 in 1 year.
Okay.
If you're gonna do it over 2 years, then it would be $2.90 per 1,000 gallons, and so on and so forth down the line. But we need to have somewhat of a cash infusion prior to freeze, prior to the end of January and early February.
So yeah, so basically by not getting that 150,000 or 150,000 back into the water fund, we're starting in the hole once again. And that's where we have to make that money up, plus try to get a reserve for the upcoming winter season, which I told Randy is about 6 weeks from the end of January to
About
the,
a 6-week period.
yeah, so.
So where do we fall with our debt then? If we put all of this onto the per 1,000 gallon cost,
Your debt's gonna go down to 1425.
right, so we're okay with that?
Correct, Kirk?
It's
Debt's
right.
gonna go to 1425 then, if you're taking 75 cents off, yeah.
Yep.
So then,
That's going to cover all of the existing debt.
yeah, and then some of that debt will come off in a few years again.
I have a question. When we had the breakdown as to where that $15 are going, I've got it sitting in front of me, and I'm looking at the 2017 DWRF was only 50 cents. So where's the other 25 cents coming out in that, as far as the debt service in that?
That was my question.
The only thing I'm thinking, we didn't start collecting that until February or March, so maybe that's where that extra 75 cents came from. Just
Well, I'm
remember-
looking for the breakdown. You can take 50 cents away from the 2017, but where's the other 25 cents coming from?
And that was,
205 or the Hargo or the Public Works or land purchase
No.
or what?
Kirk, that he's talking about,
that was my point,
50
is that
cents.
if we had account numbers assigned to those individual items, then you could go back and see what account numbers that monies are coming out of, but we don't have.
Well, even then, it's the debt. It should have been 75 cents, because that's what he said originally that we needed.
But where in the debt?
You're missing, if you're ignoring the 2017 DWRF at 50 cents, okay, fine. Now you got another 25 cents sitting out there. So you've got to take it from somewhere else, and that, something else is not gonna get any part of the dollar amount then.
And if I've got this right, you're taking, out of the combined debt service, you want to take 75 cents out of there. That's one issue. And the $1,704.75 is what that 75 cents has gotten you over the last, since January? And you just
Well,
want,
no, since February,
and you just want to move that from
right.
that restricted fund into the
Correct,
unrestricted,
yes.
which is the 75 cents again.
Yep.
That's one issue, all by itself. The other issue is the $1.67 per thousand. I don't see any specific breakdown, and maybe it's all going to one account, but I don't see a breakdown as to where that $1.67 is going.
Well,
I understand it's going for the repair and maintenance and to have a cash fund. I understand
Yeah.
that, but there has to be an account it's going to.
well, that's an accounting question. So,
Okay?
I mean, Lois is the accountant.
But when you break this all down, and I refer back to that summary again,
Yep.
the
I know
water
whatever
rate-
revenue comes in, okay,
the
we're just
water
talking
rate was
revenues.
broke down into going into 3 or 4 different areas.
And that was expenses, correct.
Right, but those 3 or 4 different areas
Revenue-
have to have account numbers,
Yep.
or otherwise you don't have anything to justify.
The revenues, there are only 2 categories of revenues, restricted and non-restricted.
Not on
Those
the
are
budget.
categories, I'm talking accounts.
Not on the budget, though. That's what he's thinking.
Revenues don't go into accounts, expenses go into accounts.
Revenues are just in one bucket.
Your expenses come out of there. So you're thinking the revenue can go into this account and your expenses come out of that account, right?
Mhm.
Yeah. But the revenue goes into a.
Well, in a
mean, do
way-
you have a copy of
In
the
a way, you
budget
do
there?
that, basically. What you have
I
in your
don't.
budget is you have the revenue line item at the top of the budget, and then everything beyond
there are
that
just
is
a few
deduction from that
revenue
that comes out to a
Account numbers.
Right.
yeah.
There are lots of
One at the
expense
bottom.
account numbers.
I agree. Out of the few revenue account numbers we have, where's the $1.67 going?
That's,
Go into water revenue. It would just go into the general revenue line item. It would not be isolated into anything else, because
Where would
it's
that
just,
appear in that summary sheet?
it's just like general fund. Well, it's a
I
little
think
different.
she's grabbing the budget.
On the revenue, you've,
Budget, that summary sheet you put together for us.
yeah, you've got, on your revenue sheet, it shows you where the revenue is coming from, basically. Whether it's sales or whatever, you've got that in the revenues, but that's a very small part of the budget. Then after that, it's all, the line items draw out of that revenue stream, that revenue total.
And I understand all that. All I'm asking is, it's true, you have just a few revenue items.
Right.
But that $1.67 is affecting some of those without affecting the rest. One of those is gonna go up by $1.67 per thousand. When you move all that down to the expense column, that $1.67 is gonna increase the expenses on some of those expense accounts. Which ones are gonna affect?
Yeah, like,
No matter which side of the ledger you're going on, it has to add up to $1.67.
Right.
well, it's like we spend on the engineering this year, that's where it would go in the expenses,
Right.
I'm sure. Some of it would go there, but.
Did I miss anything?
No,
We're just waiting for the answer.
You want to look at
Nope, I've looked at that, I can't find it.
I'm
So,
still going back to debt service, you're taking 50 cents out of one, the other 25 cents is gonna be taken out of one of the other debt items and that. So,
Well, no, I think where everybody's getting confused is, we don't do a line item budget, we do a fund budget.
I understand that, but we asked for the $15, how it was gonna be broken down as to what debts.
Yeah,
So if you take the 75 cents, and you have, on this here one, you have 5 debts that we were talking about for the $15.
right.
We're eliminating the 2017 DWRF of 50 cents. So one of the other 4, you gotta take 25 cents away from them to decrease what's going into that debt. So I'm asking is, which one is gonna be hit? Or are you gonna break up the 25 cents against the other 4? So I don't know. Because that's gonna affect the long-range
Oh, absolutely,
planning.
yes. All right, now I see where you're going with that. I thought we were just talking revenue, but you're talking about how you're breaking, you're
How you
spreading,
break it down so we know where we're going.
you know, how you're spreading it.
That, well, then, once you get that taken care of, then you go back to your accounting. That will all show up at that point in time then.
but we can't
The
really,
bottom line, yeah.
can't justify the 22 cents because if this is debt that we're not going to incur, why would we do the offset to get more revenue? I mean, it doesn't make sense. The 75 cents should just go away.
Well, I think bottom line is we're trying to mix, this is where the smoke and mirrors appears to be coming into it.
I think
We
you have
wanna
to keep it
reduce
separate.
debt service by 75 cents. We want to raise per 1,000-gallon water rate by $1.67,
Some of that.
not $1.45.
I know what he's doing, but it doesn't,
Yeah,
The problem I keep trying to get to is, where is it going? You've got a dozen accounts under revenues. The $1.67 is going into one of those accounts.
it'll be in sales, because he's putting it
Right.
against per thousand
it'd be
gallons.
per 1,000
Right,
gallon,
whatever
come
that
into
count
sales is where it
is.
would be.
But, and it should show up on that summary sheet of where the $1.67 is going. And in that summary sheet, there should be a certain number of these account numbers that are attached to each one of those items underneath the income.
But he doesn't figure his budget that way, and we.
That's an enterprise budget, that's
Yeah.
why.
He figures all of his expenses first. He does it backwards. We've already had this argument at many meetings.
Doesn't matter which way you go.
But it all goes in, whatever number is left in sales, that's what gets changed.
But it doesn't matter which way you're going. The $1.67 is gonna be income. That has to be forecast in one of these categories.
Right, it'll go to sales.
I'll take your word for it.
Yep.
The $1.67 is also gonna be an expense. It has to,
Eventually.
somewhere,
Yeah, it'll come out.
we're gonna spend it.
Repair and maintenance standpoint.
It has to
or-
go into one of these 120-some accounts.
No, it won't be one. That's what I'm saying.
In my point exactly, it has to be spread out across there.
Right.
Projected somewhere
It's,
else.
we should be able to look on that summary sheet that Treasurer Johnson's got, and we should be able to see the different categories that are listed on there. It should be broken out as to what they're changing, and we should have a list of accounts that apply to each one of those categories that he used for a summary, so we should be able to go back and see what's being affected.
No, that's not the way he does it.
I'm suggesting that's the way we should do it,
But
because
that's
other
not,
than that,
but
it's
that's,
smoke and mirrors.
that's
Well,
not the way
don't
an
you get
enterprise
budget
fund
reports,
functions,
though? I
though.
mean-
That's the problem. That's where historically we run into issues, is because an enterprise fund does not function as a normal fund like the general fund does. You see that in the general fund. Every penny that comes into the general fund, there's a track in the general fund of where it goes. Because that's the kind of accounting that we do in the general fund. The enterprise fund is not, because the enterprise fund has major objectives, and those are the ones that Kirk identified that are in your ordinance. It has to be spread first to repair and maintenance, and then it has to be spread, but it shows up in every expenditure. There's a piece of that going to be in every one of the line items, spread over the entire budget.
Then it's easy to show.
Well, you've
Well,
got it
I-
right there. I mean,
The question
you know,
that I've got is, don't you get the budget reports?
Yeah.
Okay. Well, that's all the budget accounting numbers,
I don't see the $1.67 in there, and I don't, no, what I don't see is what
Well-
account numbers in that budget report apply to that summary that you handed out.
I think what Dave's wanting to see is the amount of money now that we've spent on the extra amount of money. He wants to see it in expenditures, and of course, that's gonna cause a negative budget where you gotta try to recover that.
If the summary that was requested that you handed out, you got that right there, right, Ernie?
Which one? Are you talking about this one?
No, I'm asking about the summary that
Ernie's
was
looking at it.
requested back in February that summarized my resident water bill. And to what portions of that water bill, the money, dollars that came in on that water bill, where it went.
That right there.
Yeah, that one.
That right there.
And I gotta go take that.
Under replacement improvements, under debt service charge is $15. And there's 5 items underneath there. If you're reducing 75 cents off of that, you should be able to show me where those 5 debt service charges are being affected by that 75-cent reduction. Obviously, we don't need it for something because we have a little surplus there, so we're taking it off of there. But you shouldn't just reduce the total from $15 to $14.25. Each one of those should be adjusted as they are affected.
No, because it should be, that's what Ernie pointed out, was there's only 50 cents showing in his breakdown for the 2017 project. It should have been 75 cents, so Ernie's
Why?
wondering where the other quarter is coming from.
As am I.
Right.
Could
Then
I
when you go
look at
down
what-
below that to the replacement and improvement funds, that's based on per gallon. And we're gonna increase $1.67 per gallon.
You wanna see where it's gonna be broken out and.
Yeah, I wanna see what's going to replacement improvements, what's going to contingency, what's going to operations and maintenance.
What percent of that $1.67
Is going where?
Going where?
And all I'm saying is
Does
that
this
if
come
you
from me?
took, pardon?
You're saying this came from me?
Yes, it did. And out of these 4 items that are there, and this is actually an old one, because what you went back is you applied the $7 flat rate charge and where that was going to.
Right, yep.
And all I'm saying is out of these 4 items here, you should be able to assign what portion of that $1.67 is going to each one of those items.
No, because he can't.
Well, he can now, cause he's gonna change it.
I don't think that's correct.
This is what I was going at on this here.
Right.
It's all broken down.
It's gonna have to come to this, but right now it's not.
And if that is the summary, and we have updated the budget, it should be able to be reflected on the summary to the budget.
And you can tell a resident if they wanna know where their money's going, you can say $1 and $1's going to O&M.
That's exactly what I'm asking. They're gonna say, where's my $1.67 going? You should be able to pull that sheet of paper out and say, this is where it's going.
$1's going to O&M and.
Yep.
But the only way we can do that is to somehow earmark it. It's not gonna get saved. It's not gonna get portioned out
Well, I
for
understand
us
that,
to
but,
use. at a
but the
certain
issue
time.
that Kirk's got right now is he's got some shortfalls in some funds, and he can kind of probably guesstimate where it's gonna go. I mean,
It goes back to, going back to projection, where you think it's gonna go, and that's
Yeah.
all we're asking him.
It's a projection.
Yeah.
I mean, you're projecting that you're gonna need $1.67 per thousand.
So the breakdown of that, where
So
is it
you must
going?
have projected where you need that money
Yeah.
to go. I don't see where it's that difficult.
It's not.
And I don't understand how we're justifying the rate, other than I ran out of money, so I must need more. That sounds like a school millage issue.
No, you could say we
Well, that
need
is
some.
the issue.
When you have a pool, that's what, he has a shortfall of an amount of money. And when you divide it by the projected number of gallons sold,
I understand
that's
that.
the number.
But he has a shortfall
It
now.
isn't gonna be, 20 cents to this project, chart of accounts, and 25 and 20, it's
There
not
is
gonna
a
be
short,
that.
there is a shortfall in some accounts that justified the $1.67.
No, in the whole.
Well, the
If-
issue, the issue isn't really a shortfall. The issue is that we accelerated projects and paid
So-
ahead without,
So that money's going
Grinding
back
on
into
the
a
road
cash
project.
reserve.
right.
It's just going back into cash.
It goes back into, it would be going back, it would be going, the money I'm talking about would be going back into two accounts. One would be into the operations and maintenance, and the other would be replacement and improvement.
There you go.
Those would be the,
We
those
figured
would
it out.
be, those would be the two funds that I would say that this money that I'm talking about, that came out unplanned, would go back into those two accounts, because those are the two accounts that it came out of.
And
And
so
that's
in
why-
the summary, it should show an increase in those two accounts.
And that's
But
why I
that-
asked
but
you
that's
how
not
that would
this-
affect your cash.
Yeah,
You
but
said
that-
it would be fine.
Yeah, but that's not this $1.67 that Kirk's talking about. This is the 522,000 that I calculated came out
It's
for
not
South
the answer.
Vanderboom and the other roads.
It's not the answer. That's
When-
why I asked him.
When you collect the $1.67 per thousand, you're suggesting that it's gonna go back into those two counts primarily.
I'm not talking about the same thing Kirk's talking
Yeah,
about.
he's not.
When
I'm
when
back to
Kirk,
you.
Wait a
when
minute.
when Kirk raises, when Kirk raises, Kirk's $1.67 is gonna get spread over all of the accounts that are in his budget. There's gonna be a piece that's gonna go to wages, a piece that's gonna go to benefits, a piece that's gonna go to operations and maintenance, a piece that's gonna go to lift stations, a piece that's gonna go to, it's gonna be spread, and not necessarily equally, but it's gonna be spread throughout all of those. You know, and that's
That's
the way
exactly-
the enterprise fund,
And that's exactly
Functions.
what I'm referring
So
to.
then Dave wants a break out of the, what, on the
Where it's
new.
gonna go.
where
It
it's
should
going.
show it on the summary
You're
sheet.
not gonna get those pennies
They're not pennies, it's $1.67 per thousand.
for all of those accounts.
I'm not suggesting for all.
Yes, but they will. That's what he's saying. It goes into that pool of the shortfall.
Okay, we're gonna change the rate by $1.67 per thousand, and we're not gonna adjust the budget to reflect it?
yes, the budget will change to
And if we
reflect
re-
that.
And if we adjust the budget to reflect it, then the summary sheet should also be adjusted to reflect it. And if, yes, no?
You could make up any number you want then, couldn't you?
No, you've only got $1.67, you have to.
Yeah, you can break it up any way you want, because some will go to wages, some will go to repair and maintenance, some will
Well,
go
it's a
to
projection.
rent, some will go to retirement, some will go to, it doesn't,
Yeah, but it's just a projection, it's
Yeah.
not a, but the thing is a
But
projection.
what you're gonna see, what you're gonna see in your summary or your projection isn't gonna be $1.67 per thousand. It's gonna be $1.67 times 90,000.
No, not in that summary we're looking
And
at
that-
that
and-
Ernie had.
But it's gonna generate, that $1.67 is
understand that.
gonna generate $150,300.
I
And that
understand.
$150,000 is spread throughout that entire budget.
I understand that.
So it's, I think what Lynn is saying is if you wanna see a breakout of that $1.67, you're gonna have fractions of a penny
yeah.
in
I,
individual line
But
items.
see, the thing is now, we spent the money
I
out
don't,
of,
I don't know what sheet it is you're looking at there. I don't know what that is.
more money is gonna be,
That's an email.
yeah.
I don't want to make it more confusing, but what I'm suggesting is, one of the revenue line items is overstated. Okay? So I'm suggesting removing it from that revenue line item, putting it into another revenue line item. So therefore, the revenue stays the same as what's budgeted,
I understand.
the expenses stay the same as what's budgeted.
Except for the $1.67, you're asking for more
I
money.
guess I have a question. Why is it
No,
overstated?
in one line item, but it's coming out of another one. I added that number to the other revenue. Okay,
But why would it be overstated? Why is that line item overstated?
other revenue comes from all different sources,
Right.
okay? One of the sources I was proposing basically was fund equity. Well, I don't have enough fund equity to
Okay.
do that.
Okay, so what happens?
So it
in
comes out of that line item, revenue line item. Okay, it goes into a different revenue line item,
But what revenue line item does it come out of?
comes out of other revenue, whatever that number is.
But then that one's potentially short. See, and this is where you run into problems, when you're taking from one account to another to balance without looking at why the changes are occurring. Because that revenue line item, you just took the $1.67 out of, what happens if that goes up? And you're short in that one then. I mean, and that, that's,
That's why I say you can't break it
if you make a
out.
projection, you need to stick with that projection, and
I
and
would
go with it.
suggest that if you can't break out $1.67 and tell me where that's adjusted on my bill, and show me on that bill summary where that $1.67 is going, which one of those 4 categories needs more money, then we don't really need $1.67. Then it should be there.
That's-
I'm not arguing the point as to where it should go, I'm just saying it should show where it's going.
But it does. When it goes into the revenue line item, it's then pulled from the revenue line item
Yeah,
to
well,
a
that'd be
specific
It basically goes in all
expenditure.
100 or whatever.
Operations and maintenance
'Cause that's your
applies to a
first thing that you
couple
have to
dozen
fund.
accounts in there, I'm sure.
Well, it does, more than that. But operations and maintenance has to have a fund in it to account for unanticipated issues. And that's where,
That's an
where you,
account number, right?
but that's where you can't explain to your person who's looking at their water bill, okay, what's that gonna get spent for in operations and maintenance? Because we can't tell them what it's gonna get spent for.
No, I'm not asking for that much for breakdown, I'm just asking for a breakdown of the water bill to show them where the extra $1.67 is going. And if it's going into operations and maintenance, then you should be able to tell them it's going into operations and maintenance. You don't have to be able to tell them exactly where, because I need a new pipe wrench this afternoon. It's just going into $1.67 in operations and maintenance. That summary and that breakdown of my bill that you guys put together in February should be able to show that $1.67 and where it went. And if it went to operations and maintenance, then it went to operations and maintenance. And when you show a 75-cent reduction in the debt service charge, you should be able to show in there where it came from. And you're gonna have a hard time because
It's only
2017
50 cents.
DWRF only shows 50 cents. So where's the other 25 cents? You should be able to show it. Because the guy that walks in, and they're gonna walk in complaining about their increase in their bill, you should be able to show them exactly the same sheet you showed them before as to what justifies why their bill looks like it looks. And if you can't show them in general terms where the $1.67 went, if you can't show them that it went to operations and maintenance, and if you can't show them exactly where the 75 cents came from, why did that reduction happen, then that makes that piece of paper absolutely useless.
And it just creates a lot of confusion.
So if which is it, the primary, in the ordinance, the primary,
Operation and maintenance.
it is operation maintenance, okay, that's where it's gotta go.
Operation, maintenance, and replacement or improvement.
There you go.
There you go.
It can go wherever you want it to go. I'm just saying it needs to be stated someplace.
But see, and that's where we get into the debate in the budget process, because,
The way it's figured.
because it's, how, when you do your calculations in the enterprise fund to meet the requirements of the ordinance and the way these things are set up, you do your calculations based upon what you expect your gallon usage to be. And you make the predictions based on it. But there's also a requirement in there that you have a fund balance to be able to maintain the system. And and that's not a finite dollar amount. So, I mean, that's not something you can explain to somebody. I mean, we had almost $700,000 in the water fund. We're down to 60 because we accelerated some projects. How do you explain that to your residents? You can't put a dollar amount on that because it's in different areas. It's not gonna affect.
And the resident isn't gonna care until you change his bill.
I understand that, but the bill gets spread regardless if the work is done in Trowbridge or whether it's done wherever
Absolutely.
else. Everybody pays
In
for
this
it.
particular case, we're changing his bills. We're changing his bill, and we're decreasing his debt service, and we're increasing his per 1,000-gallon charge. And if we're gonna do that, we need to give him a general category, whether it's operations and maintenance or replacement and repair. We need to give him a general category where that
Well, an
$1.67
easy
is going.
explanation, an easy explanation.
One they can look at that tells them why their bill is what it is.
If
And
they-
that's what we come up with that for in February, to explain that. That's why we went back into that same summary and had them break out the fixed fee, the $7 a month fixed fee for the water rate, and had you break that out so we could show where that was going. And we just need to make sure that keeps going. And to expand on that, I don't mean to take up a whole bunch of time about this, but ultimately, if that's a summary, the summary is derived by the numbers that are in the budget. And you shouldn't have to go around and develop that whole summary sheet based off of the budget. There should be some algorithms in the budget that every time you change the budget, it would change that sheet without you doing anything.
Those are in there. Those are in the budget.
Then we should be able to press F9 and it should print us out a new sheet.
But you're talking about two different things. You're talking about the formulas that are in the budget so that when you make an adjustment, it automatically recalculates.
Right.
He's talking about when you make a blanket change, it should trickle down to say, it's gonna go 20 cents in this account, 50 cents in this account. And there's no way you can do that.
Because
with
every
the
time-
way
But
it is
it
now.
doesn't have to be specific. It can be, this is a projection.
Simply
of
the
where it's
general
going, and
categories.
you have to be prepared to tell that person that's asking the question, this is a projection of where it's going, and we can't tell you specifically where it's going. That's good. That's all Dave's asking.
That's all I'm asking for, is to be able to explain his bill and why it is the way it is. And there should be categories, and just like there are general categories to where that money goes and where it comes from, and we should be able to tell them that this is where it changes, this is where it increases. And the increase should equal $1.67.
Okay, so let's figure out how we can come up with that $1.67 somewhere else. Because we have a lot of unrestricted cash in wastewater.
You can't mix funds.
No, but we can decrease that money that we're bringing in
And why would we do that?
to avoid having to have it totally imbalanced. We've got a lot of money
I'm not suggesting there's
in
an imbalance.
wastewater.
We still have a lot of projects to do as well.
Right.
You're gonna have an interceptor, we're gonna have to work
Yeah.
on stuff this summer at the round.
Again, that's the danger that you run into, is because, that the money is in the wastewater fund because that is for planned projects.
Can't take it out.
We ran into the issue in the water fund because we did unplanned projects and depleted the funds that were set in there for other projects.
How many of the wastewater projects involve water? Is it like
None of 'em.
100% of them, 50%?
They're
No,
they're
they're
completely
separate.
separate
Probably
projects.
They're
separate.
separate. They just go in the same road, one on one side, one on the other.
Yeah, even in South Vanderbilt, we had a water project, we had a wastewater project, and there was a road
Separate
project.
projects.
Okay, so you always say that we have more money set aside in wastewater because the projects are smaller and they're less expensive.
Yep.
So why
And
are
we
we
have fewer
collecting
people to
more
pay for
money?
it. What?
Why are we collecting more money then?
We're not, more money than what?
More money than we do for water.
Because there's less users in wastewater.
Yeah,
There are fewer users.
and wastewater.
It's a
You
main,
got more customers with water, I forget what the amount was, but
Half of what's on water is on wastewater.
You don't see that imbalance?
it's an imbalance in the number of
You have
customers.
fewer smaller
The
projects,
expenses are equal, more or less equal.
but you have fewer smaller projects in wastewater, and yet
You have
we
fewer
collect
customers paying
more
for it.
money. All the more reason to decrease what you're charging those
But that's
fewer
because the
people.
per person cost is higher. If you look at the wastewater budget and the water budget, they're roughly the same.
Yeah, they were almost the same. So if you take what's currently available in the water side, there's currently 191,000 restricted on the water side and 167,000 restricted on the wastewater side, almost the same, within $30,000. However, the wastewater unrestricted is at 861. If we had not depleted with these accelerated projects, the water fund, the water would be at over 600,000, almost the same. So what happened is we moved ahead with water projects that were not funded, and we took away the funded project cash to pay for it, waiting for the DWF to come in to reimburse that fund by that same amount of money. And that didn't happen. But the money was spent, the work was done, and then we stopped projects. So the DWF isn't coming back in. So now we have to make that up.
So we're making 150,000 up at that $1.67 basically.
Now we have to do 500.
And
Well,
this was the danger that I talked about when the UPEA folks were standing up there saying, the question, do we go to USDA or do we go to DWRF? And, I cautioned the board at that time that we were gonna have to deplete cash because we were gonna do the work before any of that happened. Here we are.
If we would've got bonded before that, then we wouldn't be in this problem.
Well, we wouldn't have been
Planning on
able,
153,000.
we wouldn't have been able to get bonding. That was the dilemma that the board faced. Do we go forward with the water project or do we not? Because we're not gonna have the money. There's no possible way we can bond or DWRF or anything before we had to do the work because the road project was going forward in 15.
You're talking primarily the Ontario Street and South Vandenboe.
Yep, primarily. And a few Trowbridge, but not many.
Well, so moving forward, if we collect that 150,000, so that's back to where it was. And moving forward, then you're gonna get 150,000 every year to build that fund back up then.
That's assuming we put it in the improvements fund.
Yeah.
And we could say whatever you want. I mean, we could say,
So where's the
I'm getting a
quarter
headache.
coming from then?
I am too.
The
Quarter.
quarter
sorry?
For the debt, where's the quarter coming from?
I thought it was coming from the DWRF.
Yeah. But my concern right now isn't replacement or improvement, it's operations and maintenance. That's my concern.
That's
right now.
Yeah, but I
Where it
mean,
has to go.
we have to justify, if we're gonna try to stay on that route, we have to justify that
Well, then it
50
goes down
cents.
50 cents then.
Well, how do we say that
We can't
$1.67
collect 75.
is what we need?
Well, again,
I don't think you need.
One of the revenue
$1.67. I think you
line
need
items.
$2.80.
Mhm.
is not happening.
Debt service, yeah.
Not the debt
No.
service, no.
One of the line items in expenditures is not happening.
No, revenues,
Okay. Which one?
the other revenue,
Other revenue.
correct.
So other revenue is gonna have to go up by $1.67 per 1,000 gallons.
No, I'm
No,
shifting
no.
that to sales. That's where this $1.67 goes.
So the
Or comes from, I should
$1.67 is
say.
going in sales.
Yep,
That's where it will end up,
because it's a revenue.
Okay.
sales revenue.
Now, where it goes, okay, we can say anything. Operation and maintenance,
Well, projection
improvements
where it's
fund.
going.
We should say exactly where it's going, because
Well-
if you say we can say, then
that's
that
where it's
makes
going,
everybody out
operation
there
and
that's
maintenance.
looking at
Needs
this
to
on
go
TV
operations and maintenance is where it needs to
decide
go.
that they don't really know where it's going.
Well, we don't know because. we
Well,
don't know
that, I
what
guess
type
that's,
of
to
rate.
me, that's the question. Where do you want it to go?
For right now, I would recommend that any revenue that comes in goes into water operations and maintenance. After we get through the freeze season this coming winter, the board can move it wherever they want, but we need it in operations and maintenance, just in case we have freeze-ups.
Which is the sales chart of account number and the revenue.
Well, it'll, from the revenue side.
Now, the revenue goes to multiple,
Right.
Expense
But
accounts.
it's gonna get entered, it's gonna be collected through sales. It's
that's
gonna
the
be
revenue
part of
side, yep.
bills.
Yep.
Correct.
So it'll go in the sales category.
'Cause every break, freeze up, it starts at $10,000 plus. Then you
Yeah.
start digging.
So let's go back to the 75 cents. We know we can't continue to charge 75 cents for debt that we're not gonna have.
Mhm.
So if there's 50 cents attributed to the DWRF 17, we need another quarter from somewhere.
Or it's 50
I
cents.
thought it was 75 cents, but
It is 75 that we added to the debt.
well, then that's what we added it for.
That's 50 on that sheet, so.
The breakdown we got was 50 cents for 2017.
I think that was wrong, though. I think it was 14.25 and we added 75 cents, I
Right.
think. So I think that's where it
It
is,
was.
yeah.
That's what I said. It was
So that
75
sheet is
cents.
wrong, right?
Does that have to
Well,
be,
Whether it's wrong or
No.
not, this is the only thing we have to work from.
Yeah.
Isn't even 15.
so it's gotta come out of something. It's gotta
Yeah.
either come
So I
out of
would
Arglo or.
recommend, I would recommend redoing that sheet there. We have correct numbers, and then that, if a resident walks up, like David said, You can pull that sheet out and say, this is exactly where your money's going.
That, the bottom line is, that's what drives this whole thing, is what their bill says.
Yeah, and you gotta tell them where it's, a projection of where it's
I mean,
going.
you can mix and match the account numbers all you want, but they need to know where their bill's going.
And then, I mean, it's hard for them to argue if you're telling them that it's going in for operation and maintenance.
Well, nobody's gonna like it.
No, nobody's gonna like
But at
it.
least you have a defendable argument.
As long as they understand that if something unanticipated happens, we
Yeah.
transfer funds. I mean, we move money from one fund to another to cover the immediate need.
What we're alluding to is that after we collect it, we have no idea where it goes.
Well, no,
It's going into
Well, we
repair
do.
Which,
maintenance.
as a
Yeah.
resident, the obvious question I'd ask is, well, then why are you collecting it?
It's going in here.
and
Well,
that's,
actually, we spent,
Going
You got
in
a
there
short-
for
you
whatever you
spent it
need.
already, you got a shortfall, so you have to pick up $153,000.
You don't have a shortfall in your budget as the current one we have. There's no
Yeah.
shortfall in any of them at this point in
Well,
time.
we
Correct.
expended $153,000 for this project that we stopped. Now we have to make up the engineering cost, so how you
so
gonna make
that,
up?
so it has to be, it's gonna be a budget amendment because you overspent
But
your
what I'm
budget.
saying is, if you look at the figures that you got from Lois from last month, last meeting, you go through it, there's no shortfall in any of the balances at all.
But we didn't,
because some of the expenditures have not shown in the
Haven't hit
budget
it
yet.
yet.
yeah, it'll
Well,
happen probably next.
through
month.
March, and that's the best we have, that's the best we can work with.
No, you got May 11th.
Pardon?
May 11th, she updated this.
I'm looking for I have the detailed revenue and expenditure reports, that's what I'm working with.
This was attached to my.
I know, I'm looking at that too, so.
But it'll probably show up in the April, cause I think a lot of those bills came due in April.
Yeah, but that's what made me mad when I first saw it, because we ended the year with it pretty short. Somebody should have said something, so we could have addressed it then. If we were approving the budget in January and February and making those rate adjustments, we should have talked about it then. We're gonna need to have this report all the time, so we can track it. It still doesn't make sense.
I thought you were getting it every month now.
Not in that format.
No,
Well, this format is what I asked for.
we should probably get that too then, so.
It still doesn't really make sense. There's a row missing here, because in the capital assets, that's not gonna make any difference. It does, but it's not specific to cash flow. If you've got restricted.
No, that's why, right.
If you've got restricted cash,
Those are two-
125 at the end of the year,
Those are two different columns.
and a negative, you're already, your cash period is negative. Doesn't matter if you got 5.1 million in
This was
total
Dave's.
assets. Look
is
at
all I got.
what the
This
cash
was
is.
that one.
Right.
Okay, so now, what are our options?
What do we have to
How
do?
many?
What are we gonna do? I don't see that we have that many options.
No.
There's only one.
Yeah,
Raise
there's
the rate.
one,
Raise the rate.
period.
Well, you have to raise the rate, but you have to have a good, you can't go to the residents and try to explain it like we did, because they will not understand
No,
it at all.
no.
So you have to find a nice, easy explanation of what happened, which.
Simple spreadsheet.
Yeah.
This is why we have to do it. This
and
is where
then
it's going.
tell the residents, basically the explanation would be is, we spent money with the road project that, out of cash that we had, and
And we did tell
we
them that.
stopped the road project, which put us in the hole once, more. So this is what is gonna equate to a rate increase. Well, but at the bright side, you're not gonna have a $5 increase next year on your debt retirement. So, for a person like me, which I know, this is only like $1 increase. We're only arguing over $1.
And I think you can add to that we anticipated this to occur, and it didn't occur that way. And that's another reason why you make the rate increase.
And going
But you
forward.
can say that. You can say, we had every right in your interest to anticipate that this would occur, and it didn't.
And on the bright side, you're not gonna get a $5 bump in your debt retirement next year, 'cause that project's not happening. And I wouldn't think, when you get your, it's gonna take a while to build your cash up, but I don't think in the long run, it's, you're gonna keep your rates, they might be able to go down in the future.
Well, I think we can say that.
No, but I mean, it gets to a point where you get, like Kirk did decrease the
Water's gonna get more
wastewater
expensive.
rates this year, so. But we took advantage of the situation and spent our reserves down. That's what basically
But at the
happened.
time, that's what had to be done.
Yeah,
Well, and, you know,
Project was
It didn't
there.
have to be done.
it didn't
Well,
have to be, but we took advantage of it.
Yeah, to save more money with the road project.
Either that or you're gonna do it in another 20 years.
Yeah, but they don't wanna hear that now.
well, and this also begs the discussion about, do we continue to raise and reduce rates? We've had this discussion at the budget a number of times. Should we set a fixed rate for 3 years and ride that rate and review it every 3 years and, deal with a fixed rate instead of going up, going down, going up, going down? Because water usage is going to vary. It's,
Well,
depending on weather. I mean, if we have
depending on the
if we have a
year.
hot, dry summer, you're gonna have a lot of water usage.
Depending on the year, and in every appliance that is replaced that uses water, uses less water when they replace it.
Well, and you have the climatic issues that you can't control. If you have a hot, dry summer, people water their lawns. They fill their pools, they run the sprinklers, all that kind of stuff. If you have a cool, wet summer, you don't sell much water. I mean, it's just, that up and down, I've never been in favor of chasing the rates. We should set a fixed rate, ride with that fixed rate for a couple of years, 3 years, whatever, and then you reevaluate that rate. Keep our fund balances built up.
But if you do that, you have to also insert in that fixed rate enough to cover
The unanticipated.
Oh, absolutely, yes.
unanticipated.
And that's how you build your balance.
I agree with you that you could have that for 3 years, but you damn well better put that in there. And you can justify it.
Well, yeah, you have your actual operation, and if you have a year where you've collected more than you actually need to spend, that goes into your replacement improvement and into your operations and maintenance fund, and that's how you build that up. But that needs to be in around the $500,000 to $600,000 range all the time, not depleted down. So that just needs to be there because you can't predict what's going to happen with breaks, with freezes, with whatever.
Services to our residents are not gonna get any cheaper.
No, it's going to get more
It's gonna
expensive.
get more, your garbage is gonna be more, the roads are gonna be, everything else along that, what we do for the residents are gonna cost us more money in the future.
Like I said, the major impact to most residents is gonna just be a couple dollars. It's not gonna be.
See, and we did do that with the road project. We built into the road project future maintenance. We built that into the millage rate.
Well, the first thing we have to do is get rid of that 75 cents. So if you can get us something for tonight's meeting that'll show, it was 14.25, we increased it to 15. It's gotta go back to 14.25.
Yep.
So give us whatever format you want, if you wanna do this kind of format or this, so that we can have something that'll tell us where that extra quarter's coming from, and break it out the same way.
But we did increase it 75 cents, did we not?
I think we did.
But that's
yeah.
what it was for.
Well, on here it says 50 cents.
Well, that might have been wrong.
On what?
On the debt service water.
Oh, the breakdown of the bill?
Yeah.
Yep.
Okay,
So it's
well-
gotta come out of Harglow or,
If that breakdown is gonna be gospel forever, we're in deep trouble.
well,
The board's actually 75
It's not gospel forever, but it should be updated. When
Yeah.
the budget changes, it should be updated,
Yeah.
because the residents have a right to know where their
those are
bill's
numbers,
going.
if those are numbers that
Yeah.
you're giving us, or somebody, or Lois, or somebody gave us, that's what we base our decisions on.
That's why I
Gotta be
suggest you need to
right.
put a revision date on those, so we don't get them mixed up.
I dated mine, it didn't have a date on it.
Yeah.
2/7 we got it.
But the other thing is if we don't react right away, also, we're gonna be in the hole further. So we have to do
You have to
something
do something
tonight.
now.
We have to do something tonight, get it done, and, I guess the fallout from there.
Again, we don't have a choice of what to do, as far as I can see.
No. Since,
Nobody likes any increases, but
And
what are
actually,
we gonna
like,
do?
for myself, which I don't use much water, but,
I put my hose to it then.
75 cents down, $1.67 up. That's a net increase of like 80-some cents for me for 1 month. It's not gonna affect me that much.
And the average household, maybe
It's
250.
4,000 gallons, so it's gonna be like $2.75 for the average household.
Mine will be $4.76 from the last bill.
How much you use a lot of water?
When Steve, or when Frank Stabile calls me, I'm gonna give him your phone number.
Well, tell
'Cause he
him, save
will.
water, save water.
But for Lynn, the dilemma that we are in is a result of us making every attempt we can to keep the rates
No.
down. And when you do that, and you don't have the buffer that Dave has talked about from time to time, about having some excess, to some reserve, all of our efforts have resulted in this dilemma that we face tonight.
Oh,
And I don't think that's a difficult thing to say. It's just like their home life. Everybody's home is the same way. You plan as best you can, but you can't, if you want to keep it level, the best you can do is plan with the facts you have in front of you, and you can't project what's gonna happen.
Well, I would
That's
tell, and my answer to Frank is, so Frank, if the water freezes, if the main freezes in front of your hotel, and we don't have the money to fix it, what's gonna happen? You're gonna be, you're gonna be very upset. And if we don't have the money to fix it, we don't have the money to fix it. But that's what we're trying to do, is recover that money that we used to have to fix those things, which we spent down. So that's what we're doing,
Because we fixed somebody else's.
yeah. Well, we expanded our system, what we did. So that's my answer to Frank, and I mean, what is he gonna say, Other than I don't like it.
I don't think anybody's gonna like it.
They never like it, but,
It just depends on if you can explain it to
show my
them.
wife the bill.
You just have to be able to show them why.
but we did raise the debt service to $15 this year from $10.25. And I didn't myself, I didn't get any calls.
You can show them as easy as operations and maintenance is where your $1.67
And that, I think we should do that.
And that's fine.
And we can put it up on the screen, this is exactly where,
All you gotta do is be able to show them why their bill changed and be able to point to something that caused that change. Nobody's gonna like it, but at least they know where it
accept it.
went.
Well, yeah.
I like John's explanation about a household, though. I mean, that can relate to a lot of people. You do budget for things, but there's unexpected things that come up. Your freezer or your refrigerator goes down. You gotta have something, somewhere to pay for it. That everybody can understand somewhat.
Why would you buy a brand-new furnace, a high-efficiency one, and spend $8,000 now, when it'll save you money in the long run, but that's basically what we're talking about.
It's just something that we have to do, unfortunately.
Why, mine's 47 years old, and still running.
and I always tell the residents, you might not like the water rates,
49.
but our taxes are cheaper.
Efficient.
They don't get a tax bill every month.
You're doing good.
See,
They do get one
it's
every
in
year.
front of them.
They get one every year that's half of what our neighbors is to the east, so.
When you look at there, much going around.
Okay,
Spend the money
think
for
we're
it.
finished?
Okay, Gavel it.
3:30, we're finished
No.
for now.
Good.